The International Monetary Fund has sharply lowered its global growth and trade forecasts in its latest World Economic Outlook, citing escalating trade tensions and policy uncertainty. Now, global GDP growth is now projected at 2.8% in 2025 and 3% in 2026, down respectively from its January estimates. Global trade growth is expected to slow sharply in 2025, less than half of the 3.8% recorded in 2024. India's GDP forecast has been cut to 6.2% from the earlier 6.5%, though the country remains the fastest growing major economy. The IMF attributes India's relative stability to resilient rural demand, private consumption and growth in services and manufacturing. The Asian Development Bank and Moody's have issued similar downward revisions. The IMF warns that rising tariffs and financial uncertainty are hurting investment and credit decisions. While J.D. Vance announced progress in trade talks with India, the damage to trade sentiment persists. Tariff hikes have triggered a reassessment of global supply chains and are expected to continue driving inflation. Inflation now forecast to decline more gradually, higher than previously expected, especially in advanced economies. In the US, 2025 growth is seen slowing to 1.8%. Nearly a full percentage point lower than the previous forecast. Inflation there is now expected to hit 3%, up from January's 2% projection. Recession odds for the US have also risen to 37%. The impact of trade tensions is being felt worldwide. China's growth forecast for 2025 has been cut to 4%, and this comes despite the impressive first quarter growth numbers. The euro area is projected to grow 0.8%, with Germany flat at 0% and the UK downgraded to 1.1%. IMF stresses that the international economic system is entering a period of realignment, warning that continued fragmentation could raise costs and reduce efficiency. Medium-term global growth is below the 2000 to 2019 average, with structural reforms seen as essential to lifting the outlook.